Welcome to Bitcoin Dorks. In this video, we'll be discussing the recent news about the gold standard bill introduced by the US Congress and its potential impact on the cryptocurrency market. Recently, the US Congress introduced a new bill called the Gold Standard Bill, aimed at stabilizing the value of the US dollar by returning to the gold standard. This move could potentially drive the price of Bitcoin up to $30,000 or more. Let's take a closer look at this development and explore how it could affect the crypto market as a whole. First, it's important to understand what the gold standard is and why it matters. The gold standard is a monetary system in which a country's currency is backed by gold. This means that for every dollar in circulation, there is a corresponding amount of gold held by the government. The value of the currency is directly tied to the value of gold, making it more stable and less susceptible to inflation. The United States was on the gold standard until 1971 when President Nixon took the country off it. Since then, the US dollar has been a fiat currency, which means that it is not backed by anything tangible like gold or silver. Instead, its value is determined by supply and demand in the market. The Gold Standard Bill seeks to return the US to the gold standard by requiring the Federal Reserve to maintain a fixed value of gold at $2,500 an ounce. This move would make the US dollar more stable and less prone to inflation, which could ultimately benefit the economy. So, how does all of this relate to Bitcoin? Well, as we know, Bitcoin is a decentralized digital currency that operates independently of governments and central banks. It is often seen as a hedge against inflation and economic instability, which is why many people turn to Bitcoin during times of economic uncertainty. If the US were to return to the gold standard, it could make Bitcoin even more attractive as a store of value. Investors may see Bitcoin as an even better hedge against inflation than gold since its supply is limited and cannot be manipulated by any central authority. Furthermore, the introduction of the Gold Standard Bill could boost confidence in the US economy and the US dollar. This could lead to more mainstream adoption of Bitcoin and other cryptocurrencies, as people seek alternative investment options. However, it's important to note that the bill is still in its early stages and has a long way to go before it becomes law. It's also unclear how much support the bill will receive from Congress and the public. Moreover, while the Gold Standard Bill could have a positive impact on the value of Bitcoin, it's important to remember that the crypto market is incredibly volatile and subject to sudden changes. Therefore, it's impossible to predict exactly how the market will react to this news. If we take a closer look at the historical trend of Bitcoin, it is evident that it has been known for its high volatility, especially during market fluctuations. This means that it is not always a stable store of value like gold, which is why investors typically see Bitcoin as a speculative investment. However, the introduction of the Gold Standard Bill could potentially make Bitcoin more stable as an investment asset. It's important to understand what the bill is and how it could affect the US economy. The Gold Standard Bill, introduced by Congressman Alex Mooney, aims to stabilize the US dollar by returning to the gold standard. This means that the US dollar would be backed by physical gold, which would limit the government's ability to print more money and reduce inflation. In recent years, Bitcoin has gained traction as a hedge against economic instability and inflation. Inflation occurs when the supply of money in circulation increases, reducing the purchasing power of each unit of currency. This is where Bitcoin's limited supply becomes more valuable as an investment asset, making it a potential alternative to gold. The Gold Standard Bill could amplify Bitcoin's benefits as a hedge against inflation by reducing the risk of inflation by stabilizing the US dollar. Moreover, the introduction of the Gold Standard Bill could be seen as a validation of Bitcoin as a store of value asset. As investors become more familiar with the idea of a currency tied to a physical asset like gold, they may see the benefits of investing in digital assets that operate similarly, such as Bitcoin. Furthermore, the impact of the Gold Standard Bill on Bitcoin's price could have a domino effect on the rest of the cryptocurrency market. Many investors who are interested in Bitcoin also diversify their portfolios with other cryptocurrencies such as Ethereum, Ripple, and Litecoin. As the value of Bitcoin increases, it could drive up the value of other cryptocurrencies as well, resulting in an overall bullish trend in the market. However, it's also important to note that the introduction of the Gold Standard Bill could have potential drawbacks. For example, it could potentially lead to a decrease in liquidity in the market as investors shift their focus to other investment assets, such as gold or real estate. Moreover, the potential impact on the overall US economy is still uncertain, and it's difficult to predict exactly how the market will react to the bill's passage. In conclusion, the introduction of the Gold Standard Bill could potentially have a significant impact on the crypto market. While it could lead to more mainstream adoption of Bitcoin and other cryptocurrencies as a hedge against inflation, it could also lead to decreased liquidity in the market. Ultimately, the market's response to the bill will depend on how it is perceived by investors and how it affects the overall